So can we feel comfortable in this market right now, continuing to add to positions?
Well, I have been adding to positions. We're fortunate to have earnings season right now, right? So we're hearing real time what companies are seeing, how they're reporting, and they're reporting really good numbers, Dom, almost a 10% growth, and where the guides are. And the reactions have been very disappointing, but that, I think, is your opportunity. Especially if estimates are going higher. I'm not sure you're going to get rewarded near term because I know we have seasonal problems to get through in August and September, but I do think the fourth quarter setup is quite strong. And so I have been adding to some positions, especially in the industrial data center space.
Now, can you take us through your word of the day and why exactly you think it resonates right now, given our current environment?
Yeah, so the word of the day is kicker. So I've listened to a dozen of multinational conference calls, and it is clear, Dom, that China is turning. And that is a result of aggressive fiscal, monetary, and consumer stimulus programs that have been put in place over the last 6 months. So I think you want to add a kicker to your portfolio with some China exposure.
Now, the China exposure can come either through Chinese ETFs, Chinese equity funds, or it can come through maybe U.S. companies that have exposure to China. How exactly do you play it?
Yeah, that's exactly right. The latter point you made is a really good one. I think U.S. multinational companies that have exposure to China is the way to go, and especially because I think there's more transparency with U.S. multinational companies. So, for example, if you want this exposure to China, Las Vegas Sands, they have 60% of their revenues are tied to Macau. And GGR, gross gaming revenues, actually accelerated in the quarter. Singapore is on fire, and retail mall performance in China up 10%. So I think, and by the way, that stock really hasn't done very much, and it's trading at 11 times EBITDA. So I think that's one way of playing it.
Now, another way is in what we kind of teased right before the commercial break. We talked about Decker's Outdoor and why the Hoka parent company could be a way to capitalize on that China angle as well. Take us through the thesis there.
Yeah, and I don't own this, but it's on my watch list to add. The stock is down 50% year to date, trades at 16 times earnings, and the company is growing earnings at about 16 to 20%. And I do think with the China exposure, it's about 8%. So it's a pretty big mix for the company. But I do think the company is turning themselves around in terms of launching new products. And in their last quarter, Hoka, the brand, which I'm a huge fan of as a runner, was up 20%. And they guided for double-digit growth for the year. And then UGGs actually also saw better improvement, 19% growth versus 3% last quarter. So I think that this one sets up well into back to school. I think back to school is going to be really strong, Dom. And so I think this is one way you want to play it.
All right, we have just a few moments left here. Can you take us through whether or not you still feel as though a broadening out trade in the market is going to be the way to play things?
I do, Dom. I mean, I think that you don't want to abandon technology, right? Because that's where the growth is. That's where the free cash flow is. That's where the money is being spent in terms of AI and data center. I mentioned I've been adding to some of the industrial data center plays because those stocks actually have reacted so poorly to earnings, down 9–10%.
Sure.
And the companies are seeing a lot of growth and order growth. So you see visibility there as well. I think the financials will do well, too.